Every 4 years since 1999, investors in sub-Saharan Africa's second largest economy tend to slow down on major investments. The build-up to the general elections in Nigeria are often marred by reports of fraud and electoral violence, raising concerns about political stability, and there's a tendency for economics to take a back seat in the mind of politicians until after the polls. The 2011 general elections have not been any different. The equity market has fallen 11.2% off its 2011 peak and is now down 0.4% for the year, compared to the Ghana Stock Exchange, which is up 5.3%. Prospective investors in the power, oil, and gas space are thought to have adopted a wait-and-see stance towards Nigeria, and there has been slow progress in the passage of critical legislation, such as the Petroleum Industry Bill, which is expected to serve as a blueprint for oil industry reforms. But while some investors get cold feet, some analysts point to clear opportunities that exist regardless of the outcome of the polls.
Those ahead of the cycle are clearly oil and gas. Those ahead of the cycle are telecom, which are politically and also cycle neutral. Telecoms, hospitality, and oil and gas trading. But those that are defensive, which are at the trough right now and will pick up significantly after the next or during the next boom, will be commercial real estate. Commercial real estate has significant opportunities. Building and construction and building materials. Those will be the defensive sectors. Two things are fundamental in Nigeria. One, a huge population, so a consumer-led strategy is a no-brainer. Therefore, if you're in the consumer space, fast-moving consumer goods, telcos, and all that, banking, then there's no problem on that. But then there's the other case, which is Nigeria's infrastructural deficit, right, in all utilities, from roads to refineries to ports and everything. That itself is a massive case for the cyclicals. And the cyclicals and defensives, which I mean building materials, concrete, cement, steel rods, real estate, commercial real estate for residential, and then retail real estate for outlets for consumer goods, definitely. So everywhere I look around in the economy, there's a potential.
Our economy is growing at about 7.5% per annum. If we basically read the reports from central bank and others, and the expectation and the hope is that it will grow at a similar rate, if not even a faster rate, over the next 10 years. If it does that, what that means is that for every bottle of soft drink that is bought today, 2 to 2.5 bottles of soft drinks will be bought in 10 years from now. For every box of detergent that's bought today, 2 to 2.5 boxes of detergents will be bought in 10 years from now. So this is significant growth for anybody who is investing in consumer industries.
Most analysts agree that the supernormal growth phase of Nigeria's telecommunications industry is behind us. In less than 10 years, telcos have added 90 million active mobile lines to the Nigerian market. While this growth rate is expected to slow down over the next few years, the growth of broadband internet in Nigeria is thought to be the next ICT revolution.
The first thing you are seeing is the cost of these devices coming down dramatically. The second thing that we're seeing is actually the cost of bandwidth coming down. Just a few years ago, it cost $4,000 or $5,000 per megabyte to transmit data between Nigeria and the rest of the world. Today, the price is dropping to below $250, and my view is that over time, and certainly in 10 years from now, that those prices will be similar to the prices we now see in Europe and North America, which is less than $5, $10 per megabyte. And what that means with the low cost of bandwidth and the low cost of the access device, many Nigerians will demand to have these mobile computers. But more importantly, and I think that the biggest opportunity really is the services and the software that is basically around these devices.
Nigeria's maritime sector is another hot opportunity. With 853 kilometers of coastline in the Gulf of Guinea, Nigeria is seen as a natural hub for sea transport in West Africa. President Goodluck Jonathan has recognized the job creation and growth potential of the sector, and earlier this year appointed a special assistant on the maritime sector. Analysts view this as a significant step ahead of the establishment of a maritime ministry.
The size of the industry is in trillion naira. The analysis that have been done so far is so much. And when you look at, by the time the cabotage comes in fully and is being implemented, you find out that immediately Nigeria can employ about 500,000 people into it. We also produce raw materials, which are exported out of the country, like cocoa, rubber, and all the other ones that have been exported from Nigeria. And then also we import. Our importation is also high. And all these things are done by sea. Nigeria happens to be a hub. We are naturally made as hub for West Africa. So goods could be brought to Nigeria and then from Nigeria distributed to all the other areas.
And so, as investors keep their fingers crossed on the outcome of Nigeria's historic polls this month, it's quite clear that some interesting opportunities await the bold on the other side of the process.